wanted to take a look at SPY stock today. SPY stock sold off at one point down about 1%, one full percentage point. DIA, of course, and QQQ both selling off. We got two events this week. Tomorrow, the 21st, after hours, I'm pretty sure it's after hours, Nvidia reports. And Nvidia sold off pretty heavily. I've actually looked at Nvidia. It's slightly overpriced. Slightly, not much. But the big question for Nvidia stock is, of course, will the rate of growth for revenue and profits continue? This is affecting SPY stock. SPY stock today, again, selling off. The Magnificent Seven, as they are shifting lower. Some of them are moving a little bit higher. Given that, I wanted to break down the entire stock market for today, getting ready for Nvidia's number, which could really shift things. Number two, we also get the Federal Reserve meeting minutes from the last meeting, and this could have a bomb in there. Let's jump in. We'll take a look at what I'm looking at. SPY stock today, of course, selling off a little bit. It is the ETF versus the S&P 500. All three majors went lower. There was a little bit of a rebound in SPY stock today after the initial selling. We're seeing, because of Nvidia earnings potential, we've seen Nvidia stock, NVDA is the ticker symbol there, sold off a bit from its all-time highs. And this is really kind of the first real kind of breather we're looking at. And the big concern is, and I've looked at some options prices, calls and puts. The market thinks that there could potentially be a 10% move in Nvidia stock. This, of course, is shifting SPY stock as it did today and all the other majors. Here's a breakdown. What I do is I take a look at the S&P 500, NASDAQ, and all the various components within the stock market. There's 11 sectors. I take one share, break it down, next 4 quarters of all 500 in the S&P 500, add those up, divide by current price, yield 4.828% for the S&P 500. NASDAQ, it's popped up from its lowest points. We've seen 3.328 on NASDAQ. It was much lower, pushing 3.0. I thought we'd see the 2.9 handle at some point. Did not. It's turned lower. And you can see the various sectors if you cruise through there. I use so SPY stock is the Spider Select sector ETF for the S&P 500. These are the Spider Select stock ETFs, each of them for the Select sector Spider as well. One share in each. I don't weight them like they do. I just want to know how each of these stocks are going to perform inside. And you can see we've seen some moves lower and higher in various of the sectors if you've been following along with my videos up until now. Here are your so-called Magnificent Seven. We've seen some selling in Apple, Amazon, Google. Meta's holding out. Microsoft's holding up. When you take a look at Nvidia, 3.11 isn't terrible. That's not exactly a stock price that is, from a yield perspective, too high. Now, this factors in revenue growth, and it also factors in earnings per share. That's how I come up with this. And this is an average of all the analysts out there. Nonetheless, the Magnificent Seven, as they're called, 3.297%. If you take out Tesla, pops up a little bit, of course. Tesla overpriced significantly from a value investing standpoint, and I don't really see that ever actually kind of lining up anytime soon. But you get Alphabet and Meta platforms, they're actually undervalued relative to their future. But this does not encapsulate what's going on with economic data. We got some higher than expected inflation data. This might have pressured the SPY stock today a little more. Here is a look at this is the 1 hour bar chart for SPY stock today. We had the big sell-off from the inflation numbers last week, popped up a little bit higher, reversed right back downward. Nvidia could really kind of shift this, and I really wanted to kind of focus on that. Here's this is the 4 hour bar chart for the same one, all the way over to the left. That is the low that we saw back in, I want to say, late October. before bond yields shifted, everybody thought that, including the Federal Reserve, felt that they were done and that they could eventually lower interest rates. Since then, 4,100 on S&P 500, all the way up to 5,050. That's about a 23% gain in what, 3.5 months? Now, what happens next? It really boils down to the inflation data we got, how fast is the economy is going to continue its pace, and whether or not the Federal Reserve is actually going to lower interest rates. I am not in the camp where I believe the Federal Reserve is in a position to lower interest rates. Employment numbers have been pretty strong. Inflation numbers have been pretty strong, a little more than expected. We've got the CPI data came in, and here you can see how the U.S. 10-year Treasury yield popped up on CPI data last week. I think it was Tuesday. Then we got PPI data. It pointed upward, but I didn't really see it as much of a problem because the year-over-year change for PPI was 1.89%. But the CPI is printing 0.4% month over month. All right, let's say you get 12 of those without compounding. That is 4.8% year over year gain. That is nowhere near the 2%. And that doesn't calculate compounding. From this point forward, the Federal Reserve would want to see 0.1% month over month gains in inflation core so that they could hit that 2% year over year growth rate. That's compounding with this 0.4. It's not going to happen. Federal Reserve, in my book, with expenditures, we're seeing personal incomes continually rising. We get that report next week, Thursday, I believe. We're seeing numbers increase in personal incomes, and we're seeing numbers increase in expenditures. We just got Walmart. They printed today, and we're seeing how the consumer is kind of still ramping up. They're putting less items in the basket, but they're shopping more frequently. Still, Walmart printed some decent numbers, above expectations for revenue. So the consumer continues to move forward. With our higher inflation right now and the consumer where they're positioned at this point with employment numbers not really shrinking too terribly much, this isn't a position where the Federal Reserve can lower interest rates. 10-year yield fell off a little bit today, but that was probably more having to do with flight to quality versus a reversal of thinking. The VIX popped up a little bit today. We're seeing a little bit of fear with what's going on with the put call ratio and the price of those various puts. It could be that we're beginning to see something of a move to the downside. Nvidia might be a big factor on that, but SPY stock itself could easily start to slide down to more normalized levels. We were at an all-time high after a 23% move higher. I've been playing the VIX a little bit, selling calls. I'm probably going to wait until Thursday after we see what happens with Nvidia, and I could step in and sell some calls on the VIX and let them just expire worthless going into the following week. With next week's numbers, with PCE indicator, the deflator on the personal consumption's expenditure, personal incomes, personal expenditures, those numbers shouldn't be too much of a surprise. So the VIX could settle down as long as we see some a modest number with Nvidia. But I think it's overpriced somewhat and that it could come down a little bit. This is a concern that we've been seeing with the rate of growth in revenue. Dollar index. So this was Tuesday's number, and I want to kind of shift this real quick versus today. You can see the big spike upward in Tuesday from the inflation numbers. All right, this pushed the 10-year yield in all Treasury yields higher. The differential between the United States and other countries, this made the dollar more favorable. Companies will borrow out of other countries and deposit into the dollar. That's all reversed. The U.S. 10-year yield hasn't changed too terribly much. It is down from that big spike upward, but I was a little surprised to see the dollar index settling down as much as it has. There is a flight to quality kind of response here that we're not seeing really play out. But here's another one, gold. Gold, this was from last Tuesday, and I'll shift this one more time so you can see, recovered as well. So with Treasury yields moving the way they did over the past couple days, despite the PPI, the dollar and gold have come back to where they were previous to Tuesday's CPI data. Finally, I want to break down what I think is probably going to happen in the future. I do not see the Federal Reserve lowering interest rates anytime soon. With the consumer ramping up as they are, with inflation remaining as high as it is, very likely we'll see the Federal Reserve standing pat for some period of time. This is going to frustrate the market. The market has already shifted their probabilities of a March rate cut all the way out to June, and even that, the probabilities in June are declining significantly, especially after last week's inflation numbers. Next week's inflation numbers mirror what we see with CPI and PPI data. Federal Reserve won't be too terribly surprised at those numbers, but they're going to sit there and say, listen, inflation just isn't falling as much as we want. The Federal Reserve is not necessarily concerned as much with employment when inflation is where it is. And if we continue to see those kinds of numbers in the CPI, the core rate, the Federal Reserve is going to be forced to do something. And I say raise interest rates. I know I'm in a very small minority, but I look at things a little differently. I follow the consumer. The consumer is ramping up, and they're certainly not losing their jobs. We got last week initial claims and continuing claims. Saw a pop higher in continuing claims, but I'll say this one thing. One data point does not make an economy. The initial claims, pretty much flat for the week over week. We'll see what happens this week, next Thursday. If you're looking for written content on this subject, make sure to check out my website, dhtayloranalysis.com, link down below. Otherwise, make sure to hit the like and follow button if this is the kind of content you're looking for. Thanks so much for stopping by. Great comments. We'll see you in the next video.